a consistent reaction to crossing delta neutral. And to be fair, not every stock does. The main reason why I think this is happening is because there isn't enough uh, option open interest relative to the float for institutions to care or to be sensitive to the movement of gamma, which is the first order derivative from delta, or excuse me, a second order derivative from delta. They mentioned that I understand gamma max on the chart when it shoots up extremely high in those spikes. Not exactly. Gamma max similarly is a price. It's the price where a hypothetical options portfolio consisting of all option open interest for a single ticker has a portfolio gamma as high as possible. Now, admittedly, when the spikes occur, it's usually because of some weird instance. It doesn't necessarily mean gamma max is truly that high. But those weird instances and the existence of those weird instances usually is, for me, a reason to stand aside. It's not something that I'll try to correct or fix, mainly because there's so many different strikes and expirations involved. It's especially difficult to track it down. But again, uh, the actual price is largely irrelevant. What's more important is the underlying stock's reaction to that price. Now, broadly speaking, the vast majority of the Gamma Max plays that I put are puts because, generally speaking, for those stocks, when the price reaches Gamma Max, it is more likely to go down than it is to go up. And let's see. And is there any tools or to notify of these crosses? Uh, I could probably whip one up, but then we'd need to find a way to notify you of like the day's list of crosses. And I need to figure out a way to make that a good user experience before releasing it. And then in terms of good websites to go on to do proper due diligence, that depends entirely on your trading style. For some people, it's quantitative, so they rely almost exclusively on Excel. For others, it's fundamental, so they probably use FinViz or some other place that aggregates financial statements, uh, or the Edgar database. So that there, how do I put this? There are plenty of resources available, but it depends strictly on your trading style. Robo Chicken. Now, Camel No is asking, what is the best strategy for leaps? That depends on your goals. So leaps are long-term options plays, basically 1 year or longer. And the idea behind leaps is that you can expose yourself to movement in the stock price without putting up nearly as much collateral in order to realize the same dollar-based returns. Puts can also be leaps, just so you know. And then the best strike for leaps, it depends, again, on your goals. Uh, it doesn't matter if it's at the money, in the money, or out the money. What's important is that the price of the stock before sometime between now and expiration is in the money so that your leaps in theory will have increased in value. As for spreading out leaps across different sectors of the market, keep in mind that leaps still have a theta cost. So in addition to the stock moving in the direction you want, it has to move in that direction faster than theta decays the value of that leap. Otherwise, you're just giving money away. So as for anything else you need to know about leaps, there really isn't much else other than it's very popular for large institutions to sell next year's January expiration because that's a relatively cheap annualized return that can be realized in exchange for whatever collateral they're holding. Upstairs Owl asking if I use leaps. I do use leaps. And the main strategy I use them for is something called the poor man's covered call. Now, I don't use because of the nature of the market and because we're approaching a recession. I don't think a poor man's covered call is a good idea today. But as we approach the bottom, if we're not already there, the idea is you would buy an at or in the money leap, a call leap on some ticker, and then sell shorter expiration call leaps, call options contracts with a higher strike price than your leap. So the idea then is you create what's called a calendar spread or diagonal spread, and you're able to realize the shorter term accelerated theta gain against the longer term theta burn with a lot less collateral and capital than you would require otherwise. Alternative ad asking, can I explain the theory around Vega plays? So Vega is the sensitivity of an options contract to the change in implied volatility. Generally speaking, the most consistent way that implied volatility increases is the run up to earnings, and the most consistent way for implied volatility to decrease is immediately after earnings, sometimes known as IV crush. So there are occasionally some stocks, like GameStop, whose implied volatility increases for seemingly no reason, no real news, no real fundamental change in the company. And there are plenty of theses as to why. But what's most important is that the implied volatility moves up, and therefore the change in implied volatility multiplied by an option contract's vega increases the value of that option contract. So hypothetically, if you could find an option contract that has very high vega, but very low delta and very low theta, you can then trade effectively uh, the movement in implied volatility. So a play that I've been pushing over the last roughly 6 months or so was GameStop January 2023 237.50 calls. Now keep in mind, prior to the split, these were 950 calls. But what's most important is that whenever the implied volatility was low on GameStop, it made a lot of sense to buy these options contracts because when implied volatility spiked, roughly, now we know roughly every 60 odd calendar days, you're able to double the value of those options and realize a gain. And so I was able to use that to snowball an initial investment into now about a couple thousand contracts. And most importantly, those contracts are free rolled, meaning I've already gotten my original principal back. This is just house money. Now let's see. Flip Speed asking, for someone looking to just put money away every paycheck for retirement, where should I go? Something easy to just buy and let sit for 1 to 5 years. Hard to say, mainly because within the next 1 to 5 years, we're expecting a large down movement followed by a large up movement. So I would suggest, as like an initial passive move, if you haven't already done this, buy up I bonds, mainly because they're backed by the full faith and credit of the U.S. government, and they're paying, I think, 6.25% for 6 months. And if I remember correctly, you're allowed to invest 10K at a time. So I don't know how big your retirement account is, but I figure if it's less than 10K, that's the first place you should probably look at putting your money. Standard Dot asking, what is the best platform for options trading? It depends entirely on your options trading strategy. I personally use three different brokers. The first is Interactive Brokers for most of my degenerate trading. The next is JP Morgan Private Wealth Management and their brokerage, their prime brokerage. Just that's where the bulk of my money sits, and most of that is theta gang type plays. And the last is Fidelity, where I keep most of my retirement accounts, IRAs, Roth IRAs, and 401ks. So I don't fully understand Standard Dot your current options trading style or your current needs, but knowing how I deploy money and how I distribute capital, maybe that can offer you some insight into how you should deploy yours. Sauce God asking, what is the best starting resource for a total noob in trading options and markets? There's a book I recommend called what's it? Options, Futures, and Other Derivatives by John Hull. If you Google around, I believe you can find a PDF of the ninth or 10th edition. If you want to buy a hardcover, you're welcome to, but it has to be the 7th edition or later. Prior to the 7th edition, there were some changes in the options market, which has made some of the book's contents obsolete. All right, let's see what other questions we have here. We went over Vega plays, we went over retirement, uh, EFH. So Lord Boggle asking, someone mentioned a company called BFH, which is Bread Financial Holdings. Uh, I'm not entirely sure if calls are the right play. I recognize the thesis is that more credit card spend, which means more servicing, which means more revenues for the company. But I'm not entirely sure to what extent defaults against those cards affects this company's earnings, and to what extent they're responsible in case of those defaults. Now, if we were to look at, let's see, BFH, looking at their options trading chart, if you go to options.hardyrekshin.com and then look for the ticker BFH, Bravo Foxtrot Hotel, it seems they fairly consistently go down after touching delta neutral. So I understand the thesis, but using the tools that I normally use to trade, I don't agree with the thesis, at least in the short to medium term. So if you think the thesis is true, you have to keep in mind that the recession is coming. So you probably want to look at 2024 or 2025 expirations. January 2023 is a little too soon. That's only in 2 months. Pleasant Anomaly asking, do I have any tips for IBKR to get the best possible fill? Break up your trade into smaller units would be the first thing. Generally speaking, most market participants are fill or kill. That is to say, they need to fill the entire order in one transaction or they won't fill it at all. So instead of buying 10 contracts in one transaction, split it up into five contract orders. And that way, you'll be able to fill them a little bit faster than otherwise. Uh, Ostentatious, oh, that's clever, asking, how would you see the rise of AI playing against options traders doing it manually? AI beats manual options traders hands down, and they do it in a risk-adjusted way that allows them to raise tens of billions of dollars in capital for funds returning in excess of 20% a year. So there are plenty of smarter people who are able to do this at a scale and for opportunities that are no longer accessible to manual traders. So the short answer is a manual options trader is forced to take on more risk, and as a result, they'll end up getting rugged if their risk management is especially poor. I'm Uma Ichu saying I have 10,000 that I want to invest now in Canada, doesn't know where to be putting it, and should they be waiting till the recession comes harder and buy in then? I'm of the opinion if you really want to trade options for income, you should have a minimum of $25,000 in your account. That said, if you only really have that 10K, you should probably look at trading leveraged ETF options against leveraged ETFs. However, keep in mind the risk in those leveraged ETFs is much higher, and if you're trading against what's it called? If you're trading options against that, the liquidity could also drop out or become incredibly low. Someone did comment earlier that there's no pattern day trading in Canada, and that's true. Uh, However, if I remember correctly, Canadian options commissions are in excess of $10 per trade. So you'd have to be trading substantial numbers of contracts, and with $10,000, I don't think that's possible. I won't stop you from trying, but anything less than $25,000 is options trading on hard mode. And Spectra asking, what are institutional investors' typical method to initially get to delta neutral? Um, so in a very vanilla sense, for every sold options contract, there is a corresponding number of shares that are bought or sold to maintain delta neutral across the portfolio. Now, in order to prevent that's not those aren't the only tools available, but those are often the cheapest on a collateralized basis. However, as the complexity in the options market increases and the search for more alpha continues, sometimes leaps are used to offset delta obligations. Sometimes the book of trades uh, or counterparties who want to go long or short is balanced enough there doesn't need to be any additional hedging. Sometimes there are, and other times it's just a bunch of spreads to manage gamma exposure. So I would say those are the typical methods used by institutional investors. Uh, Vraj 852 is asking why are there 237.50 calls on GME only for January 2023? Keep in mind that there are certain rules for when a new strike and a new expiration can be created for a given stock. And those 237 calls were once $950 calls prior to the split. And it just so happened that the January 2023 expiration was available to trade uh, at the time the January 2021 sneeze occurred. And that's why they exist. I believe the rule is the upper strike is 2 times the 52-week high, and you can have certain types of expirations that created. There's a set of rules, basically. So, in theory, if you look at the rule book, you can predict when new strikes and expirations will be created, and then place trades on adjacent strikes and expirations accordingly because of the reduced liquidity. But that's an incredibly complex topic. I would think outside the realm of retail trading. Short the bears, asking what's the best way to collect 1% on a trade, more in equity than option question with minimum risk. Um, Arbitrage would be the best way. The most common arbitrage would be to buy the share of SPY on New York Stock Exchange and then sell the future on the CBOE, the Chicago Board of Exchange, whenever there's a price discrepancy. So that would be the best way. That said, it takes a lot of resources in order to achieve that, and for good reason. It's arbitrage, it's instantaneous profit. Complex avocado, yes, this is being recorded unless someone else does something naughty, forcing us to delete the recording. Jean-Claude Van Damme, Foxconn factories have been in lockdown for a few days already, not sure how long it'll last. Since they are the main producer for Apple products, unlikely they might not meet Apple end-of-year shipments for Apple. I don't think that's true, especially because only one factory in China is locked down, and they have plenty of capacity throughout Vietnam, India, and Taiwan. So I don't think this is reason to buy puts on Apple, personally. Uh, that said, considering the lower iPhone 14 sales and the lower corresponding services and the lower hardware sales because entering recession, there are other reasons and other catalysts to buy puts on Apple. I just don't think the Foxconn factory shutdown is one of them. Extension Remote asking, do I adjust my trading strategy based on what media like CNBC or stock news articles are pushing to its viewers? No. Am I strictly looking at technical numbers only? Also no. Technical numbers make up maybe 80 to 90% of my analysis, and then I confirm using uh, whatever's being said in the news, recent filings, upcoming events, that kind of stuff. And often, by the time news of a company hits CNBC, it's often 12 to 18 hours late or old. So if you're first hearing about it on CNBC, you're already late to the party. Chemical Plan wants to learn how events affects each industry or financial markets. How do you go about it? The best way to do it is to go in the past, look for similar events, like Russia invades Georgia. That was, well, I think they had a special military operation in Georgia, the country, not the state. And you can see how that affected markets. So if you go over any number of historical markets historical data, you can see if there were peaks or troughs. Admittedly, it's incredibly manual. Uh, The actual comparison is easy to do in Excel, but assembling the data in a way that's easy to consume is very manual. Hold the dog soul. Asking next CPI report next week. Do you think straddles would be the play? Probably not, because IV on SPY is already elevated. So straddles would have been the play last week or the week prior. Business Union asking, is there a particular app or website I use to find financials data on specific companies? Uh, Finviz, and then confirm with Edgar. Human Genome asking, how do you unwind an options trade? How can that be done? So if I sold a put at $50 strike, the price getting close to strike, but no longer want to be assigned the shares, I'd buy the put back. An example two, if I sold a covered call for a $50 strike and the price getting close to 50, don't want my shares to be assigned, what can I do? I can buy the option contract back. Jonah Bramson saying asking is TTD, which is the trade desk, is a bust for November for calls. Yeah, it looks to be that way. Small Mosquito asking, when selling covered call, what are some things to look at when considering strike if I don't want it to be exercised? I would look at the delta of that covered call. You can think of the delta as the probability that the call will be in the money at expiration. A common delta that's used on Theta Gang is 10, which or zero point 0.1, which basically means a 10% chance of that happening. You also have to consider when you're selling the covered call, you need to know the cost basis of the shares that you're using for collateral. So not only do you consider the premium you gain if the call is exercised against you, but also the strike price. There have been instances where I'd buy a bunch of shares for $20, let's say, and then after a series of call contract expirations, I finally get a call, those shares called away from me at like a $30 strike, plus, let's say, 70 cents in premium. So I effectively made 50% on that trade because, well, I bought them at $20 a share. The strike had me sell them at $30 a share, plus a little bit of premium on top, plus all the premium I've earned on other covered calls sold in the interim. ATI Lux, could I post my plays here too? If you go to my profile, I post them every day as a DD post to WallStreetBets. Although as we approach December, I'm probably going to turn off those posts, if only because liquidity will start drying up roughly starting the second week of December. Gordon Barnes asking, what determines the strike I choose when buying a call or put? Generally speaking, the delta, or the probability that the contract will be in the money relative to the price that I have to pay for that probability. So it's sort of like rolling dice, right? If the price will be, how do I put this? So with rolling dice, suppose it costs me $1 to play, and for any time the die is 2 or higher, uh, I will receive $2. If it's 1, I will receive nothing. In that sort of instance, because the game has an edge in my favor, I want to roll that die as many times as the other person will let me, because there's a larger probability that I will make more money than I lose. And similar to the premium I have to pay for a call or put versus its current market predicted outcome against what I think the outcome will be. Devil asking what stock options to buy for a buy option as today job payroll went green. That did it. Non-farm payroll went up, that's true, so more people have work, but unemployment also went up. So I suspect a lot of this may have to do with people who are who are reporting being hired as full-time, but may actually be seasonal workers. That said, anything that has high labor costs would probably be a good place to buy. Schmack asking, what books do I recommend for the absolute new person to any sort of quantitative options trading? Read up Options, Futures, and Other Derivatives by John C. Hall, 7th edition or later. I think we're up to 10 now. And then after you've read that book, the next thing I suggest you read is the original Black-Scholes paper. So you have a sense of the root or the foundation of all modern options trading. And for those who are also listening, if you know the answer to any of the questions posted, by all means answer them. It doesn't only have to be me. ATI Lux asking, why is Credit Suisse still above $4 a share? Because the market thinks it's worth $4 a share. And it probably has to do with the fact that they still have a lot of book assets left. And then they also ask, I did not understand the last play from WSP based on volatility. So hopefully the example I gave earlier made a little bit of sense. But to reiterate, GameStop 237.50s have the highest Vega divided by Delta ratio. And because they were at one point in time long dated, the theta impact and the theta burn was relatively negligible. So whenever the IV or the implied volatility on GameStop goes up, the price of these contracts goes up faster than other contracts because of that Vega exposure. And so I'm able to play the increase and decrease in implied volatility without having to worry as much about the other Greeks. Uh, Engineer, what are the good rules for getting out of an option play that is or isn't going well? If it's going well, I like to sell half on a double and then exit the remaining half at my discretion. The goal, after all, is to preserve capital. And then if it's not going well, I size the play small enough that if an option play goes completely against me, I'll lose only 1% of my portfolio. Otherwise, you'd be forced to buy it back or sell it at a substantial discount and realize the loss. Uh, Sauce God asking, what is the best starting resource for total noob in trading options and markets? Options, Futures, and Other Derivatives by John Hall, 7th edition or later. Dr. McDaddy asking, YOLO and earnings call straddle? Depends on if you think the price will move farther than the current expected move of the stock. And a very rough way to calculate the expected move is to take the cost of the straddle or strangle on the stock at the money puts and calls, and then add the combined premium to the current price in both directions. So if the cost of a straddle, if the cost of a put and the cost of a call total $7 and the stock price is 100, the expected move is therefore 7% because it can go down to net. The market's expecting it to be between 93 and 107. If you think that's true, then you should short the strangle or straddle. If you think that's false, you should go long the strangle or straddle. Standard dot asking best platform for up. I think I answered that already. All right, and we answered all these too. Okay, what else we got? Significant Emu asking Theta Gang what Theta Gang plays are and how to profit off of Theta plays. Theta is the time decay of an option. So if you were to buy an option, you pay some amount of theta in option value for every day that option is open. And conversely, as someone who sells the option, you earn that theta change between now and expiration. So if the goal is to profit off of theta plays, you just need to find options that you can sell whose value will go to zero or whose value will decrease by the time you close the options trade without going in the money and getting exercised against you. That's a very quick explanation of Theta Gang. El Kocha asking, what about Dogecoin? Is it worth inventing? Well, Dogecoin's already invented. And then what is enough to start with? Whatever you're willing to lose would be how much you should start. Uh, Golden Giraffe asking, what do we think about real estate market puts? I think they could go down or they can go up. Keep in mind, there's already a lot of bearish sentiment on the real estate market overall. So you would need to find an area of the real estate market that is still being considered bullish, which you think will be bearish, in order for your puts to make money. So Physical Exam is asking, I follow a lot of your posts regarding Gamma Max and Web Talk in the morning. Can you explain how we can play these after we buy them? When do we know when to sell? Many times you find yourself in the green but quickly turn red. So broadly speaking, I will risk 1% of my capital on those trades. I will exit half of the trade. So if I had 4 contracts, I'll sell 2 of them when the value of those contracts doubles in price. So what basically happens is I'm getting my principal back. And the remaining 2 contracts I can sell whenever I want, and I can afford to go to zero because they've already been paid for. They're I've gotten my principal back, they're free rolled. Now it doesn't always happen, and there are instances where I need to keep an eye on less likely tickers or stocks up that are too far from their gamma max or delta neutral, because oftentimes that's where there's a turnaround. And at those points, I'd probably exit those trades early at my discretion. Starman asking my thoughts on Enphase Energy. It could go down or it could go up. The short answer. Looking at their chart on my website, it appears they very recently touched Gamma Max and came down as a result. So I would wait for the price to go to 332 or 250 today if I wanted to sell, buy puts or buy calls respectively. Or those are the prices at which I would look at buying puts or buying calls.
If I may, Hardy, from what I know of you, you're never a fan of a company. You're a fan of volatility.
Correct. Yaz. Someone is asking my outlook for Amazon. Let's see. So Amazon, if we put them back into my website, I'd be willing to buy puts when the price is 140 or calls. Well, it's below delta neutral, so I'd probably buy puts if it hit 107. The chart, Lord Boggy, is options.hardyrekshin.com. I have all 5,300 tickers on there with options, and the analysis is the same for every ticker. Dr. McDaddy saying they had good luck with TIPS, which are Treasury inflation protected securities. Bought a good amount of them quite some time ago. Okay. But where's my head with the exit strategy? That depends on your tax obligations and under what entity you bought those tips. And that's something you should really discuss with a licensed professional. With your licensed professional. International men asking for a recommendation on a place for live calls. Reddit Talk has plenty of investing live calls if you want to just have an open forum where you can bounce ideas and theses off of others. But if your goal is just to follow someone else's trading calls, you're going to lose a lot of money really fast. So my cat is fuzzy asking about Baba. So looking at Baba on my charting platform, it appears most of the time it touches delta neutral, it continues to go down. If it touched delta neutral and touched gamma max, there's an even higher probability that the price will go down. The actual price level of delta neutral and gamma max doesn't really matter. What matters more is how the stock reacted since the previous touch or the last time it did this same phenomenon. The crossing is just a useful event that is easy to measure, easy to detect, and easy to compare. That said, whenever there is a cross down on delta neutral for BABA, it's a good time to buy at the money or slightly out the money puts, and then discount those puts by some, let's say 15 to 20%. It depends on during a cross how far the stock price moves in the opposite direction. You want to try to cap all of my plays that I post publicly, try to guess that move in the opposite direction before the stock finally turns around and goes in the direction of the cross. Scotty I can't pronounce that. Is there a way to close one side of Iron Condor on Robinhood? Yes, but that would require you to break up the Iron Condor. International men asking if I recommend day trading. I do not. Most people cannot day trade well, and they cannot beat the S&P 500. That said, if you think you can, you're welcome to try. But most people are not qualified for that, as much as they may think otherwise. Also, if you want to day trade, you probably need like a 50K bankroll plus margin. MVEV asking why not suggest doing buy rights, which is where you buy 100 shares of the stock and then sell uh, an in-the-money call option against it in order to achieve 1% ROI per day. And the simple answer is that it doesn't always generate 1% ROI per day. And there's also the risk that what's it called? There's also the risk that the price will drop below your strike price. And when that happens, that's when you lose money. Captain Fishpod asking what my favorite Sega Genesis game is. I never really played the Sega Genesis, so I don't know. Probably Sonic. Is that a Sega game?
NHL 1990 was a good one. NHL.
Got it. So Austin Tatius asking, what's the youngest public company I'd play? Any number of SPACs. I mean, technically, when a SPAC merges, they are reborn as a public company, right? So what matters more to me is that they have options, because that's where a lot of mispricings can occur and where I make the most money. So we got a 27-year-old Canadian. Let's see, whose portfolio is at 43K, down from 52K, holding mostly Canadian oil mid-cap. So if you want to get your feet wet in options, you can probably look at doing a buy right or selling cash secured puts. Think of a cash secured put as a paid limit order, where you effectively are being paid a modest commission in order to buy shares of a company at the strike price. So that's probably a good way to get your feet wet in options trading. And what's important is that you have to be willing to buy the company at that price. And you can watch day over day how the option price changes relative to the Greeks, relative to the underlying stock's price. And then while you're doing that, read Options, Futures, and Other Derivatives by John Hall, 7th edition or later. Camel Notes asking, news is late on news channels, so where do I get fresh, exclusive, and unbiased news? Because reporters usually bend the news as per their opinion. The easy answer is to look at press releases from companies. That is oftentimes the source that these reporters are quoting. Virtual estimate saying they're from a third world country. Should they buy Twilio? Let's have a look. Twilio. I think you should stand aside on that trade personally, but if you're really, really gung-ho about buying or selling Twilio, I'd probably still stand aside. Mainly because I don't see a repeatable pattern on their reactions to gamma max or delta neutral. Next refrigerator asking, what's the best way to figure out where your natural mindset is best utilized? Could you please elaborate? I don't understand what you're asking. Ostentatious, do I consider hyper waves in the market right now? Triple EMA flips completely inverted and downward in the weekly time frame. If fully flipped, showing we are strongly going down. Any sort of moving average is a lagging indicator. So I don't personally believe in it, but I know plenty of people who control a lot of capital who do, and therefore I cannot outright ignore it. Mindless male asking, what is a good use case for options? When is it right for someone and their goals or wrong for them? If you're trying to trade options to replace your job, or replace like a standard regular income, probably not a good time for you because unless you have a really large bankroll, you're going to lose that money anyway. I'm of the opinion speculative option trading should only be done when you already have some form of alternate income that you live off of, because controlling your emotions, feed and fear and greed especially, are the most important when you're doing any sort of trading, especially speculatively. You need to be very objective in those trades. And then why use options versus holding the underlying? They're not just for gambling. It's oftentimes a more capital efficient way to expose yourself to movements in the stock price. Mr. Green asking where can they listen to this later, distracted at work. Um, if you refresh the link after, maybe half an hour after we're done with this talk, there should be a recording. Chicken is pork, saying, I have $2,000. My plan is to take margin and make 2-day trade options a week. Will I be able to earn up to the 25K needed to be a legit day trader without being slapped? That is a, let's see, that is a 1,200% return, or uh, that's a lot of money you need to make, or that's a high return you need to make to go from 2,000 to 25K. So if you can do it, by all means, but I don't think this will happen in a week. Let's see. So Zubby80 asked me to repeat the deal with Black Scholes. After reading options, futures, and other derivatives and going through that book, if you think you need to learn more, look up the original Black Scholes options pricing paper. Not the analysis of the paper, just the original paper itself, and read it up. Try to implement the math. And the reason why is so that you understand how the vast majority of options pricing models today work. Now, Black-Scholes itself is kind of outdated, but it's a good approximation of how options today are priced, and incidentally uses the same Greeks that you're using now, or that most brokers provide for free. Asbal asking, do I like Tasty Trade as a primer for learning options? Not especially, because they only talk to you about the plays. They don't necessarily explain the math behind it, which is why I suggest that book. But if you're a visual learner, by all means, it's better than nothing. Ostentatious asking favorite play for a sideways market or sector in the short medium term, cash secured puts or do the wheel. Let's see. Final Bivix. What do I think when China opens up? Stocks like NEO will be worth playing since they are so oversold. That may be true, but you're probably better off buying puts against Yang, which is the 3x China Bear ETF. Ash Panda asking, when do I enter a trade? When I enter a trade, how do I determine my exit points? I sell half on a double, and then the other half depends on where the price is relative to gamma max, delta neutral, or if there's a news event coming up, or if there's some other catalyst that will go counter to my current thesis. Rocks and stocks, what are some good elections for my 401k in a time of recession? It depends on what's available to you. I recognize that some 401ks only offer a curated list of ETFs or mutual funds, in which point, as we're approaching a recession, you're probably better off looking for some sort of bear fund. However, keep in mind the expense ratios for that bear fund. If it's too high, you're probably better off just dumping into VU or SPY because their management costs are much lower. Wealth Deep asking about DraftKings. Let's see. Could go up, could go down. Probably going to go down, but there's no. I don't have any consistent data saying that anytime it touches delta neutral, it's a bear play. It's been a little too close to fluttering back and forth over delta neutral. Done. Would I say Capita PLC is a Volatile stock. Probably not. Yeah, it's OTC, so I guess it is volatile, but that's more because of liquidity, not because of very, very fast shifting ebbs in supply or demand. Um, so someone is asking what is the delta T in theta, or the change in theta? What is the change in time that money comes out? Is it every hour, minute? Hopefully you know what I mean. I do. And the short answer is it's instantaneous. So hypothetically, if a stock was only valued by its theta, that theta will go down every second throughout the trading day and then make jumps between market close and market open because some arbitrary amount of time passed. Keep in mind, however, theta is a component of an options price. And so sometimes you'll have an instance where theta is burning away at the options price, but you have delta, which causes the price of the option to spike up, or vega to spike up because of some event. So I wouldn't necessarily rely on theta and its decay being linear, but it's most easy to recognize between market close and market open. Vtango asking about new SPAC strategies involving under or overvalued options. Well, in the early days of SPACdom, you could sell puts below the $10 strike. Well, you could sell $10 puts basically on any SPAC that had no definitive agreement, and you'd effectively make a premium for a stock that has a treasury of $10 a share, so free money, and that lasted for like 6 months. More recently, because of the dilutive effect of SPACs, especially with pipe shares being put out onto the market, you could buy leading up to those pipe releases long term, and I mean like 9 to 18-month puts against the company, and you'd realize a substantial gain from those puts. And it's not because the market cap went down, it's because the number of shares went up. Someone asking what I think of the Nifty 50 direction. You talking about the India ETF? If you are, it's so very low volume, it's not something I'd probably play. Someone asking about PTRA, I think that's Proterra. It looks like they're a buy if the price were to go to 471 today, then a sell if the price were to go to 771 today. That's where the current delta neutral and gamma max are, and based off of the reactions to either price level, that would be a relatively safe play. But keep in mind, delta neutral and gamma max are moving targets, so you need to review what the new entry prices may be. Let's see. Pleasant anomaly. What's the difference between futures and options? Um, so how do I put this? The difference is largely the organization which regulates them. Otherwise, they're mathematically similar. Zenyatta asking, is it possible to lose more money than the amount invested on a call option? No, as long as you're not using margin. But a long call option has a limited risk and unlimited return. Arbos asking how expense ratio pays when you buy and sell ETFs in short duration. I mean, if it's that short a duration, you probably don't need to worry about it. But generally speaking, the expense ratio does factor in to the price of the ETF. Let's see. No, we went over that. Carol went over that. So, okay, and asking what's my general outlook on 1OK on similar companies for the next few months? Question. Could go down, could go up, is the short answer. And I suspect because they don't have options, they're not really interesting to me anyway. Not a knock on the companies, it's just they don't play into the strategies that I use. I'm asking what's up with Marinade, MNDE. Are you sure that's the ticker? Does match if I ask if I'm still feeling good about GSAT. If you may recall, I wanted puts against GSAT because lower iPhone 14 sales means lower revenue for the satellite communication service that Apple was including in the price of every sold iPhone 14. And it appears, thanks to the earnings that came out this morning, yesterday, that at least directionally I'm correct. CF Order saying they have 5K to invest, new to trading and investing in tech companies, seeing the huge drop off. I'm of the opinion we're not at the bottom, just as a heads up. So if you intend to hold these shares of companies beyond 2-3 years, you can probably look at doing cash secured puts so that you're effectively paid to buy the company at the strike price. Ali Fouchot asking the website being referenced. The website is options.hardyrekshin.com. Hardyrekshin spelled like my name. Al Deswari asking if I've had a talk about boomer plays and strategies. It's basically anything Theta Gang. That's about as boomer as it gets. That said, this is Wall Street Bets. So the stuff I talk about in terms of plays tend to be long or long options contracts. Pavel asking any tips for determining good time to sell options. Selling half on 100% is great, but about the other half, generally speaking, I look for if there's a better use of the capital that I have for that other half, I'll just exit it and reinvest in the next opportunity. Just keep in mind, by the time you have the second half, the options contract has doubled in price, and may very well not stay there a long amount of time. So you need to weigh the risk of losing that double versus putting the money in a different play.
Can I
Rocky,
throw in on that one, Hardy?
go ahead.
I always love that. I follow Hardy's theory on that because I never knew it before. Always, when I enter into a trade, especially if it's a short options trade, I want to identify a point where I'm willing to exit. And it's not at a percentage number, it's usually where I set a target for that particular stock that day. Some of them may have max pain calculations out there. I don't follow those as well, but I do use all of the things that go into the news that day as a guide and determine my exit point and don't get greedy. Greed and fear are not supposed to be here. So once it reaches the point where you thought it will reach, that's when you're going to close down the trade, or that's when I'm going to close down the trade. Thank you.
All right, thanks for sharing, Helicopter. Brocky asking, what impacts do you think the upcoming election week will have on SPY? Will it produce some increased volatility? It will only increase volatility if an unexpected result happens. If you remember during the Trump election, the probability of Trump winning, I think, was like 40%. Hillary was the expected favorite, but when Trump won, markets went a little bit crazy because they did not expect that to happen. Any office asking, why are super long dated options so expensive on SPY? Because you have a lot of theta that you're paying for. ATI Lux, when I look at a chart, what indicators do I lay over them and how do I read them? I have market cap, I have number of shares outstanding, and I have earnings dates. That's it. Gashbat asking, over the next 4 years, lucky enough to get 25K to invest, is it possible to turn that to 400K over those 4 years safely? No. Or should you look further out in your time frame? Also no. What would be the best strategy to achieve this goal? Um, Start a business. Invest in yourself if you genuinely want to turn 25K into 400K. Doing it on the market's very unlikely, especially if you're only giving yourself 4 years to do that. You basically need to call. Let's see, if you were to double that every time. You'd have to get 5 double or nothing correct in a row. And what's that? 0.5 to the 5? And you have a 3% chance of achieving that. So it's very unlikely, is the short answer. DNS Cloud asking my long-term investment portfolio, industries, distribution, and percentages. I mean, I've been rotating out of tech for a while. A lot of my covered calls have gotten, well, called away. Most of my plays now, let's see, I don't have a sector by sector breakdown, but I would say a good amount energy, a good amount hospitality, a good amount travel. Basically, it represents a reweighted S&P 500. So where S&P 500 is very heavily in tech, I'm heavily in not tech. Yield arb asking for noobs with 3 to 6K available for cash secured puts. Any recommendations? One stock versus several. Pick one stock, mainly because 3 to 6K implies you can only afford to sell one $3 or one $6 contract. ArcReddit asking, why is Enphase going up? Because there are more buyers than sellers. Someone asking if I trade SPY volatility on midterms. I do not. Wabi Sabi saying, damn, I missed this again. We're still here, bro. Or dudette. Virtual guidance saying they've been trying to scalp with cheaper contracts, haven't messed with at the money too much. Well, because money is longer play, at the money a better play. Well, the problem with cheaper contracts is oftentimes liquidity. So if liquidity is low, you're probably not gonna you're gonna struggle to buy and sell at the prices that make sense to you. All right, let's see the next batch. Robotalk asking if I'd recommend interactive brokers. Yes, they have low margin, low commissions. The only downside is you have to pay for data, but I mean, I don't mind paying for data. It's relatively cheap. Faraway Town saying they have the 6th edition of the book. Yeah, ditch it. 6th edition was prior to some of the new regulations that were added to the options market. That's why 7th or later. Robotalk asking what will happen to Facebook in the next 3 months. Well, it could go down or it could go up. Hard to say. My suspicion, and this is speculation on my part, is that Zuck intentionally set all the bad shit for this quarter so that the fourth quarter will meet expectations or do better than expected. That way, if you look at Facebook or Meta's history on beats versus misses for earnings, you'll see only one miss in a sea of a dozen beats. Nifty, okay, so Ace is saying Nifty 50 is the main ETF of NSE, the world's largest option derivatives market. And it's not showing up in my trading platform, so all the more reason to not trade it for me. Does Masterify asking what I think of Zim and UPS? Let's see, so Zim does not really react well to delta neutral or gamma. Well, it kind of does react to delta neutral. So if the price were somehow to go back up to 41.19, puts. And then UPS. Uh, Not much on the short side relative to delta neutral, but if the price does go up to gamma max, which is currently 187.50, then puts again, because that's the price where that's the level where I think it's overvalued. Does Masterify asking better use of capital? Yes, I drop my bags. I very rarely hold them. Zenyatta, why do I trade options? I used to work on an equity derivatives trading desk, so a lot of the stuff I do now is stuff that was too small to matter for those guys, but still wildly profitable. Wabi Sabi asking, who decides if a stock will have options? Anyone that's willing to transact or buy and sell options contracts against the company. Options are derivatives, and therefore the company has no say into whether or not those contracts can exist. Gojo Sensei asking, unemployment goes down and market rallies. It did not. Unemployment went up. Traditional Pepper asking, what percentage of my portfolio do I have invested at any given time? Um, at the moment, I have maybe 17, 2, 4, 6, 8, 19 1% plays, and then the remain in my degenerate portfolio, and then some of it's in Theta Gang plays, some of it's in, let's see, I've got some buy rights here. I maybe, right now, I'm probably 7% cash. Carvana, how far out would I go on puts? I wouldn't, because it's basically oh, what's Carvana right now? It's the put premium for super long puts would be what, $4, $5 against potential $12 gain. So there are better plays in my opinion. Darren WC, what's the likelihood of me gaining access to recording transcript of this session? Pretty close to 100%. Just refresh this page after the talk's over. And then tuition checks. I'm sure Opinion can set up like a wallet for Wall Street to fund WallStreetBets initiatives and such. Competition double. I know web development, but I don't claim to be a good front-end engineer. That said, that entire website, yeah, I wrote more or less from scratch, with the exception of the Plotly library that actually does the charting. Bobby Sabi, yes, these talks are recorded, and as long as no one says anything inappropriate, we won't delete it. So Academic Banana saying that they work for Merck, which is a shipping company, and they're expecting very positive earnings. I think that's ticker MRK. Earnings was October 27, so perhaps you meant a different ticker. Or maybe I got the ticker wrong. Gojo asking if it's better to load spy puts, looking really tempting. Why are they tempting? Because you feel something, or because there's some actual like objective analysis that's just going on there? Wabi Sabi, what book? 7th edition? Options, Futures, and Other Derivatives by John Hull. And keep in mind it's 7th edition or newer. 7th edition is the floor. Hard to say. Ostentatious about the UAP or UFO disclosure. In theory, I mean, in a perfect market, they should go cash, right? That's the right play. But other people are trying to play the fact that because others are going cash, that stocks or something will go down, and therefore buy puts. And then other people know that because of that effect, puts will be bought, so maybe they should sell puts at a higher price. And it just becomes this gigantic game theory exercise. Dilladong asking about Caterpillar 6 months out. I believe Caterpillar is stronger in mining than construction or like heavy industry. So uh, I would review that thesis, especially seeing as they're at a local high and they're pretty close to gamma max. So if your intent is calls, you probably should wait for the price to drift back down to like 197 a share before buying. And for those listening, 197 a share is the current delta neutral price. Honda asking about Square and Starbucks. Popped off earnings. Good time to buy puts. Let's see. Square. Well, if I remember correctly, Square is doing layoffs, so that may be good really short term, but terrible long term. And then Starbucks. Um, I generally don't bet against Becky until Becky is unemployed. And as for my Theta Gang plays, it's basically cash secured puts or buy rights against companies whose implied volatility is higher than normal, greater than, let's say, 90% of the last year. So Smastify asking, how often do my biggest positions change? Probably every 2 weeks, if we were to rank my positions by dollar value. But that's more a consequence of being well diversified. Zenyatta, thank you for the appreciation. We could probably host it more often, but we do need to. We probably should also look for more people who are qualified in answering these questions. Only stuff, keep in mind the 7th edition of Hull's book is the floor, the minimum edition that I would consider. If you can get a more recent edition, I would highly encourage that. And then the next thing to read is the Black-Scholes paper, like the original Black-Scholes paper. Jay Bourbon asking, what happened to Biden's student loan debt forgiveness? I assume it happened. I know some people are bragging about the 10K they got back. The Jew asking if I'm adopting. No, I have no erection. My son, and he's already a handful. Let's see.
Yeah, Hardy, that MRK ticker, that's Merck Pharmaceuticals, so the shipping company must be somebody else.
I think that's Mars Line. It's not Merck. I'll try to look it up.
Maersk. So Academic Banana is saying the ticker is MRK. So and their earnings were October 27. So perhaps they meant something else. I don't know. Someone asking if Interactive Brokers has a market for PSLV. Let's have a look.
Maersk, they're an ADR that doesn't have options.
That's right.
Okay, so I don't seem to have the ability to trade PSLV on Interactive Brokers for options. It may exist, but it's not on my account. Still Perspective asking the best earnings release for next week. No idea. My crystal balls. C Network asking, held AGNC for dividends for a long time, like to start selling calls. Don't want it called away. Then don't sell calls. You might be better off selling puts, especially if you're willing to own the stock. And then any excess shares you own because the puts were exercised against you, you can then sell calls against. So effectively, you have your dividend shares and your wheel shares. Atmosphere suitable. The short answer to becoming a reasonably good developer is to find a project that you actually have interest in. So if you want to build a website, find an easy website tutorial where you can build a basic website and then iterate from there. A lot of my knowledge is just the consequence of iterating over, how long has it been now? 20, 23 years. And it's been a while since my very first code written in BASIC.
I'm actually getting started building my own first real web app for WallStreetBets. So if you'd like to help out with that, shoot me a message. And also, if you guys are looking for the book by Hull that Hardy so often recommends, you can also send me a message for that if you're having trouble finding it on your own.
I ordered the Amazon version of the 9th edition, and the supplier ran short and sent me the 10th edition. So I made a little money right there.
All right. Let's see what else we got. We'll go till maybe 11 o'clock today, just to make it easier. Best earnings release. No, we went over that. Robin Food asking my daily plus or minus percent on my portfolio today. Today I am up 0.23% so far. Business Union, this is my real voice. Only
It's hard to
stuff.
believe.
Only stuff. The only reason why I use JPM's self-directed is so that I have access to some of their premium research. So it's a place where I have my low frequency trades, my longer term, let's say 30-day trades, and the commissions I negotiated down to an acceptable level relative to my returns. Oh, and I get invited to certain parties at their headquarters. So still perspective, I don't know what the best earnings release is going to be next week because my crystal ball doesn't work. So C Network, back then, the program was basically like using a hypothetical turtle to draw lines, and you'd have to do like some geometry to draw inappropriate shapes. Okay, and asking what is the background music? It's called Cool Jazz Loops. We do have the MP3 for it. I don't know if we want to post that publicly. So someone asking about ASTS Space Mobile and how they will be the next generation 5G with satellite connections. But the thing is, my problem with ASTS is their satellites are launching at what, 100 miles altitude? And I agree, 5G is only about 10 miles radius from the antenna, at least that a cell phone with, I think, a 3-watt radio can pick up. So I don't really understand how that from a physics perspective, let alone technological, is going to work. And for that reason, I am standing aside on ASTS. Major Retarded asking if I'll continue to have talks Monday, Wednesday, Friday. Ever since Reddit stopped doing the profile talk hosting thing, I've pulled back a bit. Most of the talks were the usual crowd that I speak with have their talks on Confused Money, r/Confused Money. If you want to speak with them, I'm still trying to figure out a good in between for hosting similar talks to what I hosted on my profile here on WallStreetBets. Having a market talk would be nice, but I also recognize that the topics sometimes drift away from markets, and that may not be productive. Someone who's bag holding Neo and wondering the outlook. I'm of the opinion cut your losses and try to redeploy the capital in a better way. Opinion, you had something to say?
Oh, I was just going to say, I think it would be interesting to explore like a live chat, voice chat type deal on WallStreetBets, similar to what we have in Discord. It's would have to be a lot less profane than there, though. So
yeah, that's my concern. Making sure we have an active and vigilant core of hosts.
Oh,
Especially
you know
since
what?
removing the karma limit effectively on those chats.
Maybe we should do that for Extra Life, which is for a charity thing that people do on Twitch, and Reddit has a team for it. Although it wouldn't really be a game, just a live chat.
Okay.
Something to think about.
Sure. Jefferson asking my worst performing year. Probably would have been 2015 minus 60%. But I also had like 1/10 the capital I have now. Someone asking my opinion on Polygon Matic. I have none. Okay, and asking the top 3 stocks to hold or buy calls long term? None, because we're going into a recession, which means downsies on everything. So wait till we're toward the bottom. Timing the bottom is going to be difficult, but I'm of the opinion we're nowhere near the bottom. Old Freckles asking if I had to pick one stock to dump all my money into, what it would be and why. Well, if I can get GameStop at $20 or less, I'd probably dump the money there. And then DRS it all. Let's see. Okay. Someone asking my opinion on Netflix. Could go up, could go down. Probably do one of those things. I mean, they're right at delta neutral at the moment, so maybe it's a good opportunity to buy calls. But at the same time, the last dozen times or so it touched delta neutral, it went down. So, because there's no clear repeatable pattern, stand aside. DNS Cloud saying I sound like Stanley Tucci Jr. Duly noted. Maybe I'll add it to my watch list this weekend. The Mattis asking my most successful strategy. It was an arbitrage strategy where I would buy in the money call contracts so that I could exercise them and receive the shares. Oh, sorry. I'd buy the shares, sell an in the money call contract, let the shares get exercised against me, and realize the premium. So it's effectively arbitrage. Or buy impriced options contracts, exercise them, and then use at the market shares. Let's see. Someone using the M1 app to invest now. Pretty confusing. Does not seem to have every stock available for purchase. That's probably true. I like Interactive Brokers, personally. They have a much, it sounds like they have a much wider library of securities than M1. Okay, and hard to say, but I'm thinking the bottom will hit like mid-February to March. It would have to be a very sharp drop, though. All freckles. Do women just jump because they're diluting their shareholders to shit. And I'm sure a bunch of AMC apes will disagree with me on that. Standard dot asking, what Canadian stock would I dump all my money into? I wouldn't. No anything asking, do I think investing in movie theaters is worth it? No, you asked the same thing, huh? No. A lot of movies are being direct released to streaming services, and let's face it, the vast majority of movies are being reshot for smaller screens. So, unless movie theaters, actually, there is a potential way out, but I don't know if it would work during a recession. So when I was in Bangkok, there's a place called Embassy Cinemas or something like that, in Terminal 21 Mall. And basically, it was a series of day beds, and you could have your food brought to you while the movie was being watched. And I don't mean popcorn. I mean like, what was it? Baked salmon, or a small salad, or what was the other thing they had? Like actual, it would basically be movie and a dinner, not movie then a dinner. So that's the kind of environment I imagine AMC would make higher margins, especially because there's a much wider variety of food.
So salad.
Perhaps. Traditional news asking for a good long-term investment. I-bonds. I would challenge you to find. My suspicion is the majority of WallStreetBets traders do not earn ROI higher than U.S. government I-bonds. And it's now 11, so I'm going to cut it off here. Thank you all for joining. If you have any other questions, by all means, post them to the chat, and I'll answer them probably later today. That said, try not to lose too much money, and enjoy your weekend, everybody.
Hey, Hardy, thanks for your time again. Every week, it's very informative. We appreciate it.
No, glad to have you all here. Oh, and for
That's
those
right.
asking earlier, the recording should be up maybe half an hour from now. Reddit controls this, we don't. So keep refreshing the page. It should be up shortly. Or I think Opinion has a stream going to YouTube, possibly Twitch, so you could probably rewatch it there faster. All right, take care, everybody.